This is a download from the BBC. To find out more, visit bbc.co.uk/Radio 4.
The economy's growing, but is it the right sort of growth? Not according to one respected group of economists. This is a report from EY, formerly known as Ernst & Young, which is warning the 0.8% growth we saw between July and September is heavily reliant on credit and the rising value of homes, which is encouraging people in turn to borrow even more. Carl Astori is Senior Economic Advisor to the EY Item Club, a financial services forecasting group, and joins me now. Good morning. Now, a few months ago, or a year ago, a lack of lending was criticised for holding back growth. Everyone's complaining the banks weren't helping, and that was seen as a problem. So do we have the opposite problem now? And if so, why is it a problem?
Well, the banks are helping on the consumer side, but as of yet, what we're not seeing is business lending growth. And there's a mirror of that for the broader economy, where what we've seen so far is recovery driven primarily by the consumer, with a little help from the housing market. But what we need to see next for the recovery to strengthen further is business investment to kick in and net trade to kick in.
OK, what is quite striking in the report is your outlook for lending to SMEs. It's now forecast to increase by 3.7% next year, 5% the year after. Now, previously, you'd forecast 7 and 10% respectively. So what's going on there?
So business investment has been weaker than we thought it would be, and so has business lending. What you're starting to see, though, in the surveys is evidence of companies being more optimistic about the economy generally, about their profits, and starting to intend to invest. And that will help both business lending but the economy more broadly to grow. OK,
I want to bring in Philip White from Syscap, which is a company which helps businesses with their investing and capital needs. And you found the government's funding for lending scheme, Philip, has done precisely nothing to the borrowing opportunities for SMEs. It's helped bigger businesses allow for cheaper mortgages. And in fact, the average cost of borrowing for small businesses was 3.8% before funding for lending came in, and it's 3.8% now. What do you say is going on?
I think that funding for lending follows in the footsteps of a number of schemes, whether that be Project Merlin, whether it be the Enterprise Finance Guarantee Scheme, and it's being taken up by organisations that probably already have access to capital, and in fact is having the effect of giving them access to cheaper funding, and in certain scenarios even funding that's supported centrally. OK,
because if you're going to take less risk, then there's no doubt that lending money secured against a house which has got 40% deposit on it is a much less risky proposition for a bank. But didn't the government sort of figure this out and say they were going to give more cheap money to those businesses which in the next 12 months lent more to SMEs? There was an accelerated incentive programme. Has that not worked?
Certainly, I mean, that's one of the principles of the funding for lending scheme. But with increasing regulation and capital adequacy and competing calls for the bank's funds, it's unquestionable that they would certainly see more security in property assets, which obviously we understand.
OK, and so, Carl, what can be done if banks have, they've got Basel III coming in, you've got, the banks have been going around recently and asked a few of them to raise a bit more capital. You can't ask them sensibly to wear two hats at once. They've either got to be more prudent or they've got to be less prudent. Which one do we want?
I mean, clearly the government seems to be focusing on the side of being more prudent in reality, because that's the behaviour that's coming through. But they are obviously talking to two different audiences, and on the one hand saying we want banks to lend more, on the other hand we want them to deleverage their balance sheets, and both things can't happen at the same time. There also is a sort of demand issue as well, that when you look at the surveys of businesses and businesses are asked, why aren't you borrowing? One of the reasons they haven't been borrowing is that they haven't been confident about the economy and the return on investment that they might get. They're starting to get more confident about the economy, and that should help with the demand side of borrowing at least.
Do you see that as well, Philip? Do you see people thinking, actually, everyone seems to be feeling a little bit more sort of, a bit brighter about the outlook, and so small businesses are actually reaching for their checkbooks a little bit?
I think there is an improving confidence, but I certainly wouldn't suggest it's material. Equally, I think that once the confidence starts to there to be a level of consistency around it, you might start to see an improving sentiment to invest. But at the moment, that's really only in patches.
But what about this supply versus demand question? Is it like small businesses are going to banks and saying, I need this much money, they're being told no? Or is it that they're not going in at all and not asking for it?
We're certainly evidencing from our own growth that people are going to banks and they're not getting access to the capital they require.
OK, and what are the alternatives then? Because we've done a little bit recently on this programme about peer-to-peer lending, things like Funding Circle. There are other ones that Nicola Horlick is doing as well, where people, private investors can invest as little as £20 or £100 and that money can be lent. Is that making a dent in this? Are people thinking, banks, who needs them?
In terms of making a dent, the hole was pretty significant. If you look at the Breeden report last year, I think it said 190 million was probably going to be the funding gap.
190 billion.
190 billion, yes. Funding Circle, peer-to-peer lending, they're all good routes. Equally, I think expanding the scheme or making the schemes more readily available for independent funders and looking at the distribution will certainly help improve it.
OK. When the Item Club does a general forecast for the UK economy, I mean, despite all this, what do you foresee at the moment? Have things turned a corner?
So things have turned a corner. You've had a couple of quarters of very good growth. What we need to see next for the recovery to strengthen further is for things to broaden out. So broaden just beyond the consumer to business investment and net trade. OK,
but you're generally feeling a bit perkier?
Yes.
Excellent. Carla Story, thank you very much indeed. And also Philip White, thank you both. Now then, probe into Mitsuo Financial Group, Japan's second largest bank, was lax in cleaning up loans that the lender discovered and knew were linked to organised crime, but didn't deliberately cover that. That's what an outside panel of lawyers said on Monday. Rupert Wingfield-Hayes, our Tokyo correspondent, gave us the background to this story.
This really dates back to 2010 when it came to light that a subsidiary of Mizuho had lent about $2 million in small loans to what are called here antisocial forces. But what that really means is Yakuza gangsters. The bank was aware of it, but it did nothing about it until the Financial Services Authority started an investigation into Mizuho 2 years later. And when that investigation began, the senior managers, including the president and CEO, said that they were unaware of these loans, but later had to retract that because these loans had been discussed in top-level management meetings.
Rupert Winfield-Hayes there on that probe into Mitsuo Financial Group, who have been found to be doing business with the mob. We haven't decided what the penalties will be there. We'll let you know as soon as they do. Let's have a look at the markets. The S&P 500 was up 0.9% last week. The FTSE 100 in the UK was up 1.5%. The Nikkei in Japan is currently up 1.7%. Pounds worth $1.62 and €1.20. To look at some of the other stories making the business headlines, David Cumming from Standard Life Investment Choice. Good morning, David.
Good morning.
We're just talking about lending. For an example of what happens when lending goes bad, RBS is a pretty good example. Lots of loans went sour and continue to dog the bank. And the question that's being asked is, should it be broken up into a good bank and a bad bank? There's going to be a government review out at the end of this week. Your shareholders, talk us through the pros and cons of splitting this off or keeping it within the bank.
Right. I think the breakup of RBS by the creation of a separate, nationalised bad bank is extremely unlikely. I think RBS have been running down their non-core assets, i.e. the bad bank, pretty efficiently over the past few years. And I don't think a breakup would improve the process. And you could argue the logistics of a breakup to create a new bank is an unnecessary distraction. So I think Osborne and the Rothschilds who have been looking into this will probably come to that view. I think, however, to appease the politicians, they will do something. So I think you'll get a more formalised process of a creation of a bad bank within RBS, and maybe they'll state that they're going to run the non-core assets or the bad bank down more quickly, and I think that will probably be an acceptable outcome. I don't think they'll do anything more radical than that.
Where are we towards on the reprivatisation of the government's share? Are we still a long way off from that? There's no chance that'll happen before the next election?
No chance. I think there's still quite a lot to do. I mean, it will be interesting whether other things happen. You've still got the issue in the investment bank and RBS. The government's putting pressure on them to pull back assets there. You've still got issues on fines with RBS. You've still got issues on capital, the regulators being aggressive with banks on raising capital still. That creates uncertainties. And I think we need to see more clarity, particularly on the capital front, particularly from Carney, before the government try to offload more bank shares, RBS or otherwise. So the answer, not before the next election.
OK, let's talk about the new most unpopular group of companies, now that it seems to have moved on from the banks to the energy companies. Ofgem is preparing a report that says that wholesale prices, which some of the companies have blamed for the increase in the recent price rises we've seen, are in fact have moved very minimally, and say that they should not be blamed for these rises. I just wonder whether we're going to see another clash with the Big Six, or whether this is the last throw of the dice for a generally discredited regulator.
Well, I think there is a case for the regulator tightening regulation. I mean, if these companies are making excessive returns for the risks they take, it is appropriate the regulator, Ofgem, Ofgas, or whatever they're called, should be more aggressive in implementing tighter return criteria, and that would actually impact prices. I think that's a more efficient way of going about dealing with the sort of issues than freezing prices or suspending green investments, because that just means higher energy prices long term as you get less investment in the industry. So I think the regulator should look at why he's not being a bit more aggressive, and maybe the government should look at that as a vehicle rather than some of the other options.
And just very quickly, the storm, does it affect GDP, or is it too early to tell?
Well, there hasn't been any storm up here. But if there is a storm, then I don't think it'll make much difference. I think you might affect insurance rates if there's a lot of insurance damage, and it might be a positive for the building sector in terms of clean-up, but little impact beyond that.
What storm, says David Cumming from Edinburgh. Thank you very much indeed.